Hello, options traders. Steve Ganz here, and I've got a new question I want to pose to everyone. Do you want a high percent of win probability trade? And it seems like a silly question at first, but as you'll see with options trading, everything is give and take. Anytime you go one direction on something, you're giving up something on the other side. And this is where a tool like OptionStrat is so incredibly valuable in my mind, because as an options trader, particularly as a newer options trader that's trying to understand these dynamics and how they all work and how they all play together, this is just a fabulous tool for helping you to understand that. So I'm going to use the optimize feature here in OptionStrat. And let's just say that we'll go ahead and we'll just use Apple. And I'm going to say that I'm fairly neutral on Apple right now. Now, Apple's had a big upside bullish move, and it's currently trading at about 207. It had been down below 180 just a couple of weeks ago. But if my premise here is that Apple's kind of hit a plateau and it might start to chop sideways now, maybe I want to do a trade around Apple. But the thing I want to specifically look at here is the fact that I have this awesome slider right here built into OptionStrat to where I can come in and envision some different reward to risk ratios on my trade. Now, we can see that right here in what I'd call kind of neutral land between a maximum return or a maximum chance of having a win. Right now we're in neutral territory. I also want you to notice that on each one of these trades, this tells me exactly what my profitability, my potential profit is on the trade, what is the potential risk in the trade. And these two are defined risk trades, these first two. This one is an undefined risk trade, which means it's going to take a lot more collateral or a lot more buying power, if you will, to make this short straddle trade or this short strangle trade. That's because I'm selling a short strike here and a short strike here, and I am not buying any long strikes to provide me any protection. So these are what are called naked short positions. And again, it takes quite a bit of money to put on those trades. It's going to use a lot more collateral. So let's just say that I'm budget conscious here. And another cool feature, I can come in and say, you know what, I don't want to risk more than $2,000 in a trade, okay? It'll instantly knock out those other options for me to consider. So now I've got a couple trades. This one's going to carry 1570 in risk, 826 in risk if I'm centered up here. But this is what I want to share with you that I think becomes a critical factor, because there are people out there many times that are advertising or marketing, we have 90% winning trades or 95% winning trades or whatever the case might be. So let's see what that looks like. If I move this up to a max chance of profitability, all right, we can see here that in this particular case, yeah, I got a high chance. I got an 85% chance of this trade being profitable. That's because I'm selling all the way down here at 180. I'm selling a put. And then all the way up here at, let's see, what are we at on that upside? 230, I'm selling a call. And then I'm buying a 240 call. And then on the downside, I'm selling that 180, buying a 170. So I have a very high percent chance of this being a winning trade. But my profitability on this trade is only going to be $38 less commissions. I've got 4 legs here. Let's say I'm paying $1 a leg for commissions. That's high. Nobody should be paying that, but just for simplicity's sake. So I'm actually about $34 in profit, but I had $4 to open this trade, $4 to close this trade. So now I'm down to about $30 in profit. And look at my max risk. If this trade were to go against me, if again, over the past couple weeks, Apple moved up 27 points. If Apple moved up from 27 points here, I would be down almost $1,000. If Apple dropped back those 27 points, got back into that 175 range or so that it came from, I could be down $962. So if one of those events were to occur, that would wipe out, 30 different trades where I earned $30 each. So I have to look at this as a trader now and say, is there a 1 in 30 chance that I could get potentially wiped out on one of these? My contention is yes, there is. And based on that, I may not want to be doing this. Many traders will call this, those that have tried this before and that are had the experience that I personally had doing this sort of thing. People call this picking up pennies in front of a steamroller. Yeah, you're picking up a penny at a time, penny at a time, penny at a time. But then if that steamroller catches you, bang, you're done. Okay? So you have to be really careful when you're looking at any system or any person or whatever that's claiming that, hey, we do 85% winning trades, 90% winning trades. I can get 90% winning trades and it works great right up until it doesn't. And then when it doesn't, I've given back my profit in 30 or more trades, assuming I had 30 that I was profitable in before this happened. Maybe I only had 3 trades that were profitable and I picked up $90 and then I have this occurrence. So what a trader has to do is they have to come in and they have to analyze this. They have to look at, what does this look like if I look for a different reward to risk ratio? And that's what the essence of trading is. I go in, I look at a chart pattern, I try to determine what is a realistic range that I might expect XYZ stock to trade in. And if I think there's a specific realistic range that I'm okay playing in, and that realistic range gives me a 66% chance of profit, maybe that's where I want to go. Or maybe I want a total, I just want the absolute maximum potential return I can get in the trade, which is $600 in profit. But I've got a much lower percent chance of that happening because, of course, Apple doesn't have to move as much for me to get outside of the profitability zone. All I really wanted to do with this was just to illustrate the trade-offs that all of us as traders face as to where we want to place our risk, where we want to place our reward. And the same is true whether I'm looking at a neutral trade like this, or maybe I'm looking at a bullish trade. I've got the same thing here where I can come in and I can say, okay, so I'm using the same parameters here, a budget of $2,000. My target price, I moved higher because if I'm bullish here, this is a maximum return sort of scenario. But what if I wanted a maximum chance of profit? Again, I can do that by coming way, way down here and selling a bull call spread, or excuse me, in this case, buying a bull call spread or selling a bull put spread. But again, let's look at our chance of profitability. Our chance of profitability is very high, but I'm only taking in $7 in profit. And again, after commissions, in this case, I've got 2 to get in, 2 to get out. So I've got $4 in commissions. I'm looking at a $3 profit. And when this trade goes against me, that 5% chance that it goes against me, I have wiped out 125 profitable $3 trades when that happens. So again, I just want to drive home that anybody can put together a system that has a 90% chance of profit, an 80% chance of profit, but you have to look at what the risk is on the other side of that trade to help understand if that's a viable trade that fits your premise of what the underlying is going to do. So hopefully this made some sense. If you would, make any comments down below. If you like this sort of content, please like, subscribe, and thank you very much.